नरघट तक है तेरी कहानी पग पग प्यारे दंगल 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 सूरज तेरा चढ़ता ढलता गर्दिश में करते हैं तारे दंगल 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 दंगल.
Great morning. So today we will be covering with alternative investments. We have already covered 5 lectures, so today will be the lecture number 6th. A very small lecture, lecture number 6th. In this lecture, I will be concluding private equity fund part. And in today's lecture, I will be discussing with what are the exit routes, how the exiting methods, what are the different types of exiting methods which can be followed by a private equity firm for exiting from the previous investments. So basically we will be doing with 6 methods. There are 6 methods. So please take out your registers. You have to write down those 6 methods. There are 4 or 5 slides, handwritten slides are there. So firstly listen to my story and then we will write down handwritten slides. So my story is, there are 6 methods with the help of which a private equity fund can exit. The first method is IPO. With the help of IPO, initial public offer, with the help of IPO, a company can exit. A private equity fund can exit. What is IPO? It is initial public offer. It means you are selling the shares to the public, and the public is investing the funds. It is a very easy way to exit from that private equity fund. But the point is, IPO can only be there if the markets are very good, and if there is liquidity, if there is an existence of liquidity. When you go for an IPO, the risk factor reduces and the value you get is higher value you get from that. So IPO is the best way to exit because private equity fund will get the highest value from that. I am just giving you an example. Let there be 2 companies, one is private company and second is public company. And if private company as well as public company has a requirement of bank loan, so please tell me which company will get preferred for the bank loan from HDFC. It is but obvious public company, because public company has offered the shares to the public. Public company records are more transparent. Public company records are more transparent as well as regulated, because more regulations are there, more disclosures are there. So a banking company will prefer a public company for granting the loan as compared to private company. So the first exit route is IPO. The second, there are 6 methods, there are 6 ways with the help of which a private equity firm can exit. The second is strategic sale. No doubt the price which we will be getting in initial public offer, in case of strategic sale, the price will be lower. This is strategic sale. And the third is recapitalization. When I say recapitalization, it is not actually exit, rather planning to exit. A private equity firm has invested in a portfolio company for 4 or 5 years, and that company has to give some return in against to that private equity firm. Now that private equity firm requires some return on the investments after 4 or 5 years. But this company does not have any cash, any liquidity. So this company will borrow some debt and then pay the dividend to this private equity firm. So this borrowing of debt for paying the return to private equity firm is a preparation of exit. So there are 6 methods. I have just discussed 3 methods. The first method is please sit straight. Your spinal cord should be straight. The first method is IPO. IPO, initial public offer, best method because the highest value which they will be getting is in the IPO. The second is strategic sale, strategic sale, strategic sale. And the third is recapitalization. It is not actually exit, rather a preparation of exit. Recapitalization, recapitalization. The fourth method is trade sell. When you sell, when private equity firm sell to a competitor, that is a trade sell. Secondary sale, secondary sale, secondary sale. There are 6 methods. Secondary sale means when one private equity firm is selling to another private equity firm. And the last is liquidation. And the last is liquidation. You might have heard about liquidation of a company. In case of a liquidation, all the assets of the company are being sold piece by piece. That is named as piecemeal. So in liquidation, all the assets are slowly being sold to outside. So it is also an exit route. So in total, there are 6 exit routes, but the best exit route is initial public offer, IPO. IPO is the best method of exiting, but it has some conditions. IPO can only be there if the country, if the economy is going in a high liquidity form, or the markets are good, markets are galloping, markets are increasing, then only you can go in an IPO. Second is strategic sale. Second is strategic sale. Third is recapitalization. Recapitalization, when a company borrows a loan for paying dividend to that private equity. Fourth is trade sell. Trade sell. Trade sell, when we are selling to a competitor. When we are selling to a competitor. Secondary sale. Secondary sale, when one private equity firm is selling to another private equity firm. And the last is liquidation. Last is liquidation. My dear friends, any question can be framed from any of these 6 methods. So please take out your registers. I have prepared some handwritten slides for you. Please note down those slides so that the concepts will be more better clear to you. So please write down alternative investments. Lecture 6th. We have already started alternative investments. There are different types of investments. We were discussing private equity. Lecture number 4, I have discussed what is private equity, how many types of private equity funds can be there. In lecture 5th, I have told you the structure of private equity. Now in lecture 6, I am telling you the exit routes. So please sit straight and please write down these slides. Alternative investments, lecture 6, and we are discussing LOSD, learning outcome D. Learning outcome D. This learning outcome D is very lengthy, Methods for exiting private equity funds. Methods for exiting private equity funds. So I have prepared a very beautiful flow chart for you. Please prepare this flow chart, because by preparing this flow chart, you will be better, you will be gaining the more clarity in the concepts. There are 6 methods of exit. There are 6 methods of exit. Method 1 is IPO. Method 2 is strategic sale. Method 3 is recapitalization. Method 4 is trade sell. Method 5 is secondary sale, and method 6 is write-off/liquidation. So please prepare a circle like this only. Private equity fund I have written in the middle. Then the first is IPO, the second is strategic sale, the third is recapitalization, the fourth is trade sale, the fifth is secondary sale, and the sixth is trade-off or liquidation. Now any of one of the question can be framed from this, on any of the concepts. So I have tried to cover all the concepts in my next handwritten slides. So you have to write down something on IPO. Method 1, way 1, initial public offer. The best way of exiting, is through IPO. The best way is through IPO. As an IPO, you sell the shares to general public and the likelihood of getting higher price is good. Because the risk is minimized, because the value is maximized, because the public is interested in that. But it can be possible if there is a liquidity, if the markets are good. So please write on A point. Method 1, please sit straight. Initial public offer. The best way of exiting is through IPO. As an IPO, you sell the shares to the general public and the likelihood of getting higher price is good. B point, in the same method, IPO can only be there if markets are going very well, because then only public will invest. Then only public will invest their savings. If the markets are good, if the markets are in booming period, risk of the company goes down after an IPO and value goes up. It means IPO is the best way to exit. So I have just told you the difference between private company and public company, and as a banking company, a banking company will prefer a public company to give the loan as compared to private, because in public company, public has invested and the more regulations are there, more documentation is there, more disclosures are there, more transparency is there as compared to private. So IPO is the best way of exit. Method 1. Method 2. Please write it down. Don't sit idle. Please write it down. You are my friend. You are my real friend. Please write it down. You have to pass in this coming June or December. Method 2. Way to strategic sale. The value which you will be getting in strategic sale will be lower as compared to IPO. So please write it down. The second way to exit from private company is strategic sale. No doubt the price in strategic sale is lower than IPO. Method 3, recapitalization. Method 3, recapitalization. Method 3 or way 3 is recapitalization. R-E. It is not replay. Recapitalization. A company is borrowing debt for paying the return to that PE firm. So please write down, it is a preparation of exit. It is a preparation of exit and not an actual exit. A private equity fund has invested in the company which has to provide a certain IRR. Now for 4 or 5 years, nothing has been provided. Now this private equity firm is telling that please give us a dividend. And for paying that dividend, that company is borrowing some loan or debt and then repaying it. So please write it down. Method number 4, trade sell. Selling to a competitor is named as a trade sell. Secondary sale is selling of the stake by one private equity firm to another private equity firm. That is secondary sale. That is secondary sale. So after this method number 5, you have to write down last method number 6. That is write-off or liquidation. Write-off or liquidation. That is selling assets by piece. Selling to the public the assets. Now the company will liquidate or will write off. This is also a method of exiting. So there are 6 methods with the help of which a private equity firm can exit. Be happy, be jolly.